today. So I wanted to give you a brief portfolio update, and then we'll jump into Centerpoint, and I'll give you some technical analysis and some financial analysis on the company. So here's the M1, the long-term strategy. I'll show you how the market did. Relatively flat today, up 0.3%, had some down, had some up, nothing special. So the portfolios pretty much followed the market, as you would expect, especially this one. Sometimes it doesn't follow the market because real estate has a low beta, so it doesn't follow the market exactly, and this is 22% of my portfolio. So some days it's up, some days it's down compared to the market, but usually it follows the S&P 500. For my Robinhood account, exact same scenario here. A little bit lower on the gain just because I made quite a few trades today, and I'll go into which trades I made and why in a later video. But I did buy 2 more shares of Centerpoint, and that is the stock we will be talking about today. It was up 1% today. We can look at the 1-month chart. It's down for the month, and it's up for the year. But I think it can be definitely gain in price. I'll go into why here in a little bit. So here we go. We'll go over to the dividend growth chart. Make sure this is good. Yep, it looks good. So they had some struggle here in around 2000, but that was, more than almost 20 years ago. So no need to worry. Management's always been very shareholder friendly, so they're just going to keep raising the dividend. So if the dividend's raising, then you would expect the dividend yield to remain relatively flat, and it is relatively flat. So it's a little down versus its 4-year average. It's a little down, so that means it's a little bit overpriced in the long view here. If you could have got it up here above 5%, you could have rode that wave all the way up. So that's the dividend yield. I'll go into my my interpretation of these graphs in a later video. I plan on making a new series called Financial Tips or Investment Tips. And I'll give you my rationale for each of these graphs that I'll go into. But for right now, it's looking decently priced, right? So if you look back here in 2017, it had a dividend yield of right about 3.59, and right now it has a dividend yield of right at about 4%. So I think it has about 0.5% to go down still. It does have some wiggle room. I think it's at the top of these ebbs and flows, as you can see. So it goes down to 3.5, goes up to 4, goes down to 3.5, goes up to 4. And when it has ebbs and flows like that pretty regularly, that's just easy money. That's easy buy, easy sell, just like that. So I'll show you guys the advanced chart here. So this does look complicated. I went ahead and threw on the MACD. When you do add the MACD, be sure to set, I'll go ahead and show you guys, be sure to set it at 15 and 30. I like it better. I think the regular is 12 and 26 or something, but 15 and 30 seems to work the best for me. It probably worked best for you guys too. So make sure to add that. All right. So I'll go ahead and add it for you guys again right here. Just search MACD, and then we'll go into it. Looks a little complicated, but change the fast length to 15, change the slow length to 30. I do not use a histogram, and that's all you need. All right, so I'll go ahead and give you my interpretation on these indicators. So we have Centerpoint. It is at about its 52-week average, I'd say. Always use the year graph, guys. I mean, you can use the 6-month if you really want, but I've just noticed that anything less than 6 months, these indicators become quite confusing. I'm not day trading here, okay? My strategy is to hold for a couple months and ride that couple month wave up, okay? So it could be down one day, could be up one day, but overall, over those couple of months, it's gonna go up by at least a couple percentage points. That's what I'm looking for. If I invest, if I get 3 or 4 shares and the share price is $100 and I invest $300 into it, well, I just make $3 or $4 doing nothing. And if I get a dividend within that time, great, I get a dividend in that time. So here's the A-rune. I mentioned this in the last ones. So we want to look for on A-rune a sharp spike up, and we have that. And we want to look for this going at least below 30, and we do have that. So I'm gonna wait. Maybe tomorrow I might buy this stock, even more of it. But do you see right here how it hits 100, it drops back down, and then it hits 100 again? That is a great sign. That is a huge sell sign. And if the blue line is below 50 and it hits the top again, buy. That's my signal. So I would have bought right here. I would have killed it. I would have bought up here. I would have sold up here, bought down there, gained $3 in just a month or two, just from this stock. Okay, the more money you put in, the more risk you have associated with it, but also the more reward you'll get, right? As with everything. So now I want to show you guys the MACD line, right? So you have the red line and the blue line, okay? So in this one, the blue line is your indicator, okay? So when the blue line spikes up above the red line, that is another buy signal, and we have that today. We have that today. So I went ahead and bought 2 more shares of Centerpoint. I just really like the look of these 2 indicators. Let me show you another time where this went above the, so let me just tell you. So the red line is the longer moving average, and the blue line is the shorter moving average. Okay, and it basically tells you momentum. So when the short-term momentum is greater than the long-term momentum, that usually signals a trend upward. And when a rune is at the top, that's a trend upward as well. So these are 2 trend signals, and that's what we're looking for here. We're looking for riding a trend up, okay? Right now, I think it's the perfect time to jump in on Centerpoint. Let me show you another time. The slower moving average jumped above the trailing moving average. So here, right before a rune signals, right? And then we get that a rune signal, and it's just going to go up. So I'm very confident that this stock is going to go up to at least another $1. So everyone can make $1 per share on Centerpoint. I really believe that. So I'll go into a little bit about the company and why I like it. I have a few family members who work at Centerpoint. It's not a huge company name. It does have above a 5% dividend yield. And these are all of its holdings. It has just different sectors in different country or different cities and different countries all across the globe. They acquire quite a few different smaller, both electrical and utility companies. So think natural gas, electrical. That's what they're into. It's a very stable platform that they're using. It's a very stable company and industry that they're using. They're not involved in the oil like BP. It's natural gas and electricity for people, right? So that's their main focus. The only time that I'd ever seen this stock take a plunge is during hurricanes or stuff like that, because a lot of their business is done in Houston, right? So when Houston loses power, right, they're going to lose earnings. So that's the only time that I've ever been hesitant to buy it. But right now, there's no hurricane in the Gulf. I think it's a good time to buy it. I think the charts are telling me to buy. So that's what I wanted to share with you guys today. That's my interpretation of what Centerpoint's going to do in the next few days. And I think it's a solid stock that even if it does just plummet right here, I'm okay with holding it for the long term until I get my money back. And that's what I'm trying to tell you guys is that all these stocks that I'm showing you are stocks that I'm okay with holding for the long term. Even if my plan that it goes up doesn't realize, it just goes straight down, that's fine. I'm still going to hold it for the long term, and I know eventually that I will get my money back plus dividends, right? So that's my strategy. I'll see you guys in the next video where I discuss the indicators more in depth and a whole portfolio update. So I'll see you guys soon.